You're going to need a minimum of a 600 personal FICO score. What's going on, YouTube? Welcome to the Credit Plug channel, where we talk about how to build credit, how to establish relationships with banks, and most importantly, how to get you access to high limit credit funding. If you haven't already, make sure you hit that subscribe button as well as smash the like button. We greatly appreciate the support. So for today's video, we're going to be talking about business lines of credit, and I'm going to be sharing some data points on a particular business line of credit that will be a great resource for small businesses. Now, one of the great advantages of business lines of credit is that it gives you access to cash versus a loan where you have to pay interest immediately. With a business line of credit, you're not paying any interest until you draw down on the line of credit. So you could just have the business line of credit on the sidelines for when a business opportunity presents itself. Now, you have business lines of credit from alternative lenders. You have commercial banks. So these are going to be the big banks and the credit unions. Then you have the SBA. So there are some different considerations with these different types of business lines of credit. Now, in terms of documentation, alternative lenders are going to be the lowest in terms of documents. Most of the times it's just going to be bank statements. And a lot of these alternative lenders are fintech organizations where they're able to utilize technology to gather a lot of the data. So you don't actually have to provide, physical copies. You have commercial banks. Now, usually they're going to require a lot more documentation if you're trying to get business loans, lines of credit. So things like tax returns, financial statements, balance sheets, profit and loss statements. Then you have the SBA. They're also going to be a high documentation. They may even want to see a business plan. Now, in terms of the interest rate, because this is something that I see as well in the comment section, alternative lenders are going to have higher interest rates than the commercial banks. Now, the trade-off is that even though it's higher interest, there's lower documentation and lower underwriting criteria in order to get approved for an alternative lender. Whereas with the commercial bank, you're going to need to be established. You're going to usually have to provide 2 years, in some cases 3 years of personal and business tax returns. So yeah, you'll get the lower rate at the big bank, but just keep in mind, you're going to have to provide a lot more information and you're going to have higher revenue and higher credit qualities. In today's video, we're going to be going over Funbox. Now, Funbox falls into the alternative lender category. So with that being said, you can get funding in as little as 1 business day. They have flexible lines of credit up to $150,000. Now, Funbox offers 2 different products. They have a business line of credit as well as a term loan. So the revolving line of credit goes up to $150,000 with repayment terms of 12 weeks to 24 weeks. So that's roughly 3 to 6 months. They also offer a term loan up to $150,000 with repayment terms between 24 and 52 weeks. So that's basically 6 months to a year to repay the term loan. So these are going to be shorter term financing solutions. Now, one thing you do need is a business checking account because they are going to be using Plaid to link to your business checking accounts. So in order to qualify, you do have to be based in the United States. You're going to need a minimum of a 600 personal FICO score. You will need a business checking account and ideally be in business for at least 6 months. So these are the basic qualifications. Now, some of the differences between the term loan and the line of credit: the term loan is going to be a one-time lump sum of whatever the approval amount is, whereas the line of credit, you draw funds repeatedly without having to reapply. So let's say if you get a term loan and you utilize the entire term loan, if you want more capital, you have to reapply. Now, with the line of credit, you can draw funds, and then once you repay that particular amount, then it replenishes itself so you can repeatedly use it over and over. There's no origination fee. There's no prepayment penalty. So you could pay the loan off early without prepayment penalty. And they have easy payments. Now, these are going to be automatic debits. So these are going to be coming out of your business checking account every week. So it is a weekly payment. Now, applying is very straightforward. I've dropped a link in the description of the video, but all you basically got to do on this first step is put in your first name, last name, email, phone number, and you create a password. And so that'll be your login. And then you just enter in right here your average monthly revenue. And this is the business's average monthly revenue for the last 3 months. All right, so after you create your password and login, it's going to take you to the business details page. So on this page, you're going to enter in how much you're looking for. So whatever the amount that you're requesting. So let's just say it's 50,000 that you want to request. And then from here, what would you like to use the funds for? Now there's a drop down menu where you could select what the purpose of the funds will be. So if it's for payroll, inventory, hire employees, marketing, and then here they ask what percentage of revenue is from online sales. Now you don't necessarily need to be generating online sales in order to apply for this. This is just one of the questions that they do ask. And, you could just select what the percentage. So let's say it's, less than 10%. And then they're also going to ask you, do you have existing short-term financing? Their definition of short-term financing is going to include business loans, lines of credit, invoice financing, equipment or vehicle financing, existing merchant cash advances, or personal loans that you've used for your business. Do not include PPP funding. Now, on the next page, you're going to enter in some of the owner's information. So the first name, last name of the owner, date of birth, last four social security, as well as the business address, as well as your home address, the business entity type. So they accept sole props, general partnerships, corps, as well as LLCs and limited partnerships. Right here, you could search for your industry type. So they have a range of different options for you to choose from. So now I did want to highlight right here. So it says, I agree that if credit is extended to my business and I accept the terms by drawing funds, Funbox or its agents may perform a one-time hard credit inquiry. Now, in order to apply and get approved for a line of credit, it's not going to be a hard credit check. However, when you do draw down on the funds, then it will be a hard credit check. Now, after you enter in all your business information, they'll ask you to log into your accounting software. Every business owner should have an accounting software. I recommend QuickBooks, and I've dropped the link in the description of the video. Now, the reason why you want to have an accounting software is because nowadays with a lot of lenders, a lot of fintechs, they're going to be plugging directly into QuickBooks to grab all of your business financials, like your profit and loss statement, your income sheet, your statement of cash flows. All of that data can be pulled out of QuickBooks or whatever your accounting software is. All right, so after connecting your accounting software, they're then going to ask to connect to your bank accounts. All right, so after you get your offer, then they'll log you into your dashboard where it shows you the available credit line. So in this example, 16,500. Now, up to this point, there's no hard credit check. It's just a soft credit check. So I'm just going to be walking you through how to draw from the line of credit. Now, all you got to do is enter in the amount. Now, let's say, for example, you want to draw $1,000 and you can draw up to the maximum amount, but it'll show you what your payment is. Just hit this review and draw. So with the 12-week term, your weekly payment is going to be $92 per week for 12 weeks. And the total repayment is going to be $1,104. So one way to look at this is if you were to borrow $1,000 from the line of credit over 12 weeks, is going to cost you about $104 in interest and fees to borrow that line of credit. So if you think about that, that's about 10%, a little over 10% over that 12-week period. Now you have to look at your business, right? Because for some business owners, if you need $1,000 and you're going to deploy that into your business, it might make sense if it's only going to cost you $104 to borrow that money over 12 weeks. Now let's look at the 24-week option. Now, if you were to borrow that over 24 weeks, the payment is only going to be $51.41. However, the total repayment is going to be $1,234. So one way to look at that, to borrow $1,000 for 6 months, basically, because that's 24 weeks, almost about 6 months. So to borrow $1,000 and repay it back in 6 months is going to cost you $234. Now, again, it's all going to depend on your business model, what you're using the funds for. Now, this will tell you what the principal as well as what the fees are going to be within the different payment windows. So payments 1 through 4, you're paying back $72 in principal and $19 in fees. So there's going to be more interest that you're paying on the front end, and then later in the payment cycle, you're going to be paying back more of the principal. And that's usually usually how it is with most loan products. Now, again, once you hit this review and accept terms, at that point, that's when you're going to get a hard inquiry. But up until this point, just to get a credit limit, there's absolutely no hard credit check. It's just a soft pull credit check. If anyone is interested, I've dropped a link in the description of the video. And if you apply through our link, you'll get $100 gift card if you're approved and draw on your line of credit. So this is another great bonus for you guys. All right, so let's recap the Funbox business line of credit. So they offer both a business line of credit, which is a revolving line of credit, as well as a term loan up to $150,000. Now, the draws are between 12 to 24 weeks on the line of credit. Now, in order to apply, you will need to be in business for at least 6 months. And the minimum credit score is going to be a 600 FICO score. And they're going to be using Experian to soft pull you as well as hard pull you when and if you do draw on the line of credit. So in order to get a line of credit, it's not going to be a hard inquiry. Until you draw down on the line of credit, that's when they're going to hard pull you. They're not going to change the terms of the line of credit. So it's going to be exactly what you were approved for, even if there are some changes in your credit. The interest rates are going to be somewhat higher than what you would find at a commercial institution. However, you're not going to have to provide as much documentation. Now, you will need a business checking account that's linked to your EIN, and you will need an accounting software. I recommend having QuickBooks. So that's all I wanted to cover in today's video. If anyone has any other information or data points on the Funbox business line of credit, definitely let us know in the comment section down below. And if anyone is interested in applying, I've dropped a link. And again, it's just a soft pull to get an offer. And if you do draw down on the line of credit, that's when they will hard pull you. So until next time, take it easy and we'll talk to you soon. Peace.